Hey traders, welcome to video 5 of the BinaryOptions.net trading video series. In this video we're looking at chart patterns and specifically triangles. We'll look at the other chart patterns in future videos. So we're building on what we've learned in prior videos. We're looking at support and resistance, trend lines as well. So those are visual tools we can draw on our charts to establish where trends are going and also view these chart patterns. So chart patterns are simply visual patterns that occur frequently in financial markets. Once we notice them, we will isolate them by drawing trend lines or support and resistance lines on them so that we can see how the price acts while it's in the pattern and then when it ultimately breaks out, which is where we're looking to trade. Chart patterns can be a continuation or reversal pattern. Quite often they will appear as consolidations during a trend. A consolidation is simply a pause in the trend, so if the trend's moving up and then we start to see a sideways pattern or a triangle, that would be a consolidation. It takes practice to spot chart patterns in real time. It's easy to see them in hindsight, but go through your charts, look for these patterns, and it'll become much easier the more you practice to be able to see them in real time and be able to trade them. There are multiple chart patterns, and we're going to look at each one in video in upcoming videos, explaining the general entry, stop, and profit target guidelines. Triangles are a pretty common chart pattern. You'll see them in all markets and on all time frames. We're looking for 3 high and 3 low points to make a triangle. Often it's seen as a consolidation during a trend, and these are the best ones for trading. When you have a consolidation during a trend, since we already know the price was moving well before it, it's more likely that it will continue to move well, providing profit opportunity after that consolidation completes. Once the pattern completes, the trend often resumes, which is why it's called a continuation pattern, but this doesn't always occur. We could have an uptrend, a triangle, and then it actually breaks to the downside and reverses the trend. So we don't want to assume that we know which direction it's going to go. Instead, we wait for the breakout, or what is known as the pattern completing. There are 3 types of triangles: symmetric, descending, and ascending. They look slightly different, but they're all traded in the same way. When the price breaks to the upside out of a triangle, we are looking to buy. And when it breaks out, that's what's considered the pattern completing. So we're looking for the 3 high points, 3 low points. We isolate them on our chart by drawing the trend lines. And when that pattern is broken, that pattern is considered complete. So the upside, we're looking to buy. We place a stop just below the triangle, and our target's equal to the widest part of the triangle. And we'll look at examples of all of these. When the price breaks to the downside out of a triangle, we're looking to sell short, buy puts, or get out of any long positions. If we take a short, we're looking to place a stop above the triangle, and our target's equal to the widest part of the triangle. So for additional information, you can always find additional trading articles, tutorials, free trading resources, and charts on BinaryOptions.net. Alright, I got a chart of the Euro USD up here. It's a 15-minute chart. Here we have a ascending triangle. It is ascending because these highs, we have 3 of them, which is what's required to make a triangle, are all reaching a similar level, whereas the low points are rising. So that is why these lows are ascending, which is why it's called an ascending triangle. So the basic strategy here is, once we've drawn the trend lines, this one here, we are waiting for the price to break out of that triangle. Here we do see that this ends up being a continuation pattern. Strong run up, consolidates, and it does eventually move higher. Not as strong as it did before, but it does move higher. So once this breaks out, we place a stop just below the triangle, and our target is based on the widest part. So from this point to this point, and that is added, whatever this distance is added to our breakout point. So you can either do the math, get this high minus this low, and you'll get whatever it is, 30 pips, 50 pips, 100 pips, and add it to the breakout price. Or what I like to do is you can simply use what's called a Fibonacci retracement tool. We're not actually using it as an indicator here, we're just using it as a price gauge. So all this is showing is that this is 100% of the move from the low to the high. We move that to the breakout price, and we can see then that our target is actually right where the next triangle begins. So right there. Another way that you could do it is simply grab a trend line tool, move it from the high to the low, and then add it to the top, and we can see that that is roughly where our target is. So that saves you some time. Instead of doing the math and actually calculating it out, you can just move your stops and targets to where you want them based on using these simple guidelines. So we'll get rid of these. So that one would have worked out well. Here we have another one which occurred shortly after. This one is a descending, and we can see that because these highs are getting lower and lower and lower, yet the bottom is staying, all these lows are reaching roughly the same area. So we have more than 3 points on the top, 3 points on the bottom, and again we're waiting for a breakout. So the breakout occurs here, stop goes just below. Let's color that one red for stop. And once again we can use our, let's just use a trend line tool this time. And usually if we have something like this where we have multiple waves, I'll look at a little bit more conservative target. So this is where the pattern sort of really becomes apparent. So we'll use this here, add that to the breakout price, and then this is where our target would be. And let's color that green for our target. So you can see often with triangles our risk is relatively small compared to our reward. It'll often be about 2 to 1, meaning if we're risking 30 pips, our target will often be 60 pips, and that's simply because triangles are narrowing, which means the closer it gets to reaching what we'd call the apex of the triangle, which is right here, you can see if it held through here and then you bought here, the risk is extremely small. So the smaller the triangle gets, the lower the risk, yet we're still basing our target on the widest part. So our profit targets are almost always, well, they will always be bigger than our risk. So a couple good examples there. So we looked at ascending, descending. A symmetric triangle would simply be when both the highs and lows are converging on each other. So it would look like this. Instead of having one of these lines flat, both are moving toward each other, and the price is just moving in between like this. Horrible drawing, I know. And then eventually we have a breakout. So it's traded the exact same way. We'd place our stop just below here, and our target would be based on this widest part of the triangle and added to the breakout price. So if you are trading normal markets, that's how you look at it. If you're trading binary options or some other option, you would look at more of a time-based how you're going to take profit. So you might want to give it, depending on this, maybe 20 bars for it to actually break out and move. So, you know, let it go for a few hours, pick expiries a few hours, or if you're looking at a daily chart, give it maybe a week or so to actually break out, because you can often see it'll break out and then come back to test the former, in this case would be resistance area. So we have this resistance area, breaks out, comes back to test it again, and then goes, and that's quite a common occurrence. Breaks out, comes back to test it again. This one tested it multiple times before it went a bit higher. So that's quite common, so allow a bit of time for that market to actually move in your direction. So that covers triangles. In the next video, we're going to look at probably one of my favorite patterns, which are flags and pennants. Until then, happy trading.